Welcome back to CryptoZonZ. Peer-to-peer, trustless, permissionless, decentralized news gets you into CryptoZonZ. How to prepare during the present economic collapse. In this video, I'll dive into what I told you before I would come back with in my previous video, where I mentioned how the dollar is strengthening. Well, I'm coming back with some really good info on how to respond to what's going on right now. We'll discuss the relationship between inflation and deflation, liquidity crisis, financial crisis, and then we'll look forward to the possibility of how we will necessarily have to respond in case of a bank shutdown. And I don't say that right now to cause any alarm. I bring that up because it is something that the wise would be prepared for, because it's not outside of the realm of possibility in light of the fact that this truly is universally agreed that this is the greatest financial hurricane or tornado or crisis. This is some really crazy things going on right now. But I will just want to remind all of you that I do stack the show notes, and for those of you who find particular interest in some of the things I'm going to talk about, well, about 90% of my videos, I take it upon myself to stack the show notes with some really good information for you to click on further if you want to go further down the rabbit hole. I have links to pertinent articles and also some really good commentary from other commentators from YouTube or other social medias. But looking at the reason why the dollar is strengthening, we've got to look back. I'm gonna look back to actually like August and September, when the Fed started initiating what they call an overnight repo market, where they were essentially bailing out insolvent banks overnight. And what they were doing was offering low interest loans to the tunes of billions and billions of dollars. At first it started with $100 or $200 billion, and they said, well, that's going to be the limit of it. Right. And then it ramped up through November, December, and the beginning of 2020 to go over $1 trillion worth. Essentially, it's bailing out the banks without the approval of the Senate. Back in 2008, we had the onset of QE1, or quantitative easing 1, where they bailed out the banks in 2008 to about $800 billion or $900 billion. Well, what's going on right now just dwarfs what's going on back then. But the balance sheets of the Feds are greatly expanding with these new stimulus packages. The one that has already been put out, where some of you got a $1,200 stimulus check, and then the one that is near approval by the Senate today on May 25th, 2020. It still isn't finalized, but it's very, very close. And that one will be another $3 trillion, essentially inflating the balance sheet of the Feds to, I think it's up to about 7 or 8 trillion. But getting back to the specific point at hand, why is the dollar strengthening? Going back to how they were bailing out the banks, and then that was really after many people who are highly connected individuals and commentators and economists. I mean, they've been commenting for decades, a couple of decades, and even specifically in the last 10 years, that the oncoming crash or reset that will really need to have to take place to reset the economy, or however you want to term that. But just looking forward to what's going on right now, getting closer to, like, say, January, what really started happening then was that people were beginning, well, people and everyone, but firstly the banks and highly connected individuals were beginning to buy up gold, but specifically central banks as far back as the latter part, Q3 and Q4 of 2018, were buying up gold at record rates. We know that Warren Buffett, for example, got up to about 130 billion, 135 billion in cash, the largest cash reserve by an individual in history, I believe, where he essentially was saying, hey, I'm going to wait, the stocks are going to crash, and I'm going to buy up on the cheap. But so going to January here of 2020, there was a lot of rumblings, and what we saw was in March, I believe it was, but when the Feds came out with their first, when they went from 2.25 down to 1.75 as far as the federal fund rate, they dropped it a half percentage point. which they called an emergency measure, which they haven't used that terminology for like 10 years. But right away we saw that the markets didn't react. They kept on pummeling down. And then about a week after that, or I think it was only like 6 days after that, Fed Chairman Powell called a meeting on Sunday, which was practically unheard of, but he came out with an announcement that they were going to drop the federal funds rate another full percentage point, dropping it down to essentially zero. It's 0.25. So it went from I misquoted a little bit earlier. It went from what was 1.75 down to 1.25, and they dropped it down to a quarter. And that was in response to the continuing sell-off in the stock market. And the reason for that was their first attempt to stabilize the markets. They still didn't see the stabilization of the markets. But what we're talking about here are essentially two words, inflation and deflation, the relationship of them. But first, before a crisis happens, we see liquidity, like a liquidity crisis, and where people, and as I've been talking about this, what we've seen is this has been kind of going on in murmurings and with greater and greater force for at least since the end of 2018, but there's been a buy-up of gold and silver, real estate, art even, but with hard assets to prepare or to a particular flight to safety or security. But especially it ramped up in the Q1 of 2020, which then started, more and more people. I mean, what do you do when you want security and safety? You would even sell gold to get cash or to dollars. And that is, in a nutshell, what was happening. Everybody and their mother, the Wall Street, private investors, accredited investors, corporations were selling into cash, which strengthened the dollar. And that's kind of like at the end of where we are at right now. The dollar is strengthening because even though other nations have been introducing their own forms of quantitative easing, or in other words, pumping more currency into the market, they are flooding to the US for swap lines. They're trading their currencies for dollars. So dollars are gaining value around the world. And we're still at that point. This is deflation. So what that means is we're not seeing the rise in prices. What it means is the dollar's value is going up. So if you got $1,000 and you want to buy, let's say you want to buy a weekend's worth of a hotel accommodations, the dollar will get you a good 3-4 days, we'll say, for sake of conversation, because the dollar's value is high. If it was inflated in price, then you would need $2,000 for a weekend's worth of hotel accommodations. I know that may not have been the best example, but essentially there's a flight to liquidity or currencies, cash at hand. That's the king at the present time. So it gains in value. But what the people who are in control of the economic monetary policy want to do, which they have done, and we all know it, they have introduced quantitative easing. So there is this great induction of cash. So with the induction of greater cash out there, people who are in the stock market, well, the stocks will rise in value. People will buy. There'll be more purchasing of stocks, pumping up asset prices. But then this will be short term. This is still in the area of deflation. But will classically and most probably and practically undoubtedly happen is that this will be short term, and that with greater and greater dollars and currencies out into the market, what will happen is the value of the dollars will diminish, meaning that you'll need more money to buy a gallon of milk, for example, than you do today. So that's one thing that we're going to be seeing, and one great kind of a fundamental understanding of how things work or have worked in the past to give us some really good light on what will likely happen in the very, very near future. Simply put, there's been a liquidity crisis. People are flying to cash. There is a great empowering of the dollar. So, but now with greater greater currency or the quantitative easing, the money printing that's going on, there'll be a diminishment of the dollar, which means that asset prices will begin to go lower, the stock prices will begin to go lower, and it will cause inflation where prices also of commodities and goods will go up. And looking forward, we've got to think then, well, one big thing that the powers that be, the levers of power, are doing is they have been talking about eliminating cash and everything going digital. And this isn't just simply going to a credit card. This is the next level of, well, it's an actual digitization, putting things on a ledger, and what they'll use is some sort of blockchain technology that is already existent to minimize expenses and bottom lines and a lot of excessive cost. It'll be a good thing at first, but it won't be any different than, say, the present dollar. It'll be just a digital version of the dollar. But what that will also do will give a great centralization of power to the central banks or the governments of the world to click on or off any particular individual or entities or corporations privileged to engage in the present economy. We could call it sanctions. I mean, we know that with like Iran, the U.S. has sanctioned Iran, and their response, as a side note, has been that they are actually buying a lot of Bitcoin in specific. And they stand to gain massively from that, as of course the Bitcoin price would pressure up or go up in value, which will give them massive profits to consider, or massive gains in value to consider as a backing for their own particular currency. But we've really got to, at first or at present, all of us consider what would we do if we went to the banks and they were closed. It really causes a lot of consideration for us to what would we do. Right now, a lot of people would say, oh, I'll just use cash. But if they're going to take cash away, well, then what are you going to do? And as I've thought about that, I thought that there has to be, it's good for me to have been in the Bitcoin and cryptocurrency market per se. For right now, it looks like I'll be able to exchange cryptocurrencies for goods. It begs the thought, or beckons the thought of saying, if I trade gold or silver pieces for goods, I could do that even if my switch was switched off, so to speak. And this isn't really something that we shouldn't think about. It's actually something that we should very much consider. Just ask a lot of the people in Hong Kong or even in China or other parts of the world. How about Cyprus in 2013? So it is something that is much more of a possibility in the present state of affairs, in the present environment, and how things are going on. Please, I'll link, as I mentioned in the beginning of the video, I'll put out show notes for those of you who want to go down a deeper rabbit hole, gain deeper understanding, or look at other people's commentary. Hashtag love all, serve others. I greatly appreciate the time that you've given to listen to this. Please like and subscribe and click that notifier bell and click on the green planet right about there. I'll appreciate it very much. I wish you well. I wish you wealth. I wish you health. And until next time, peace.